Thanks, Malasela. Good afternoon, everybody. This, I believe, is going to be a very interesting session today. Yesterday, we spoke about tax legislation updates, the budget updates, and how that all impacted us. But what underpins a lot of how we deal with SARS and the various institutions is the Tax Administration Act. And that is what we'll be looking at a bit today, as well as some recent case law that impacts how we interact and how we deal with SARS. So my first question to the panel, and I'm not going to get into detail, into too much detail on each person, but I am going to ask this question from each of the panelists. The Tax Administration Act was enacted officially on the 1st of October 2012. So we're about 12 and a half years in on it. Do you believe that this act has actually achieved what Treasury set out to achieve with this, to start off with? Prof. Small?
I think to a certain extent it has. I think the biggest problem with the Tax Administration Act is that not sufficient education has been done around the application of the Tax Administration Act. And I think very often when SARS, who is knowledgeable on the Tax Administration Act, implement the legislation, many taxpayers and tax practitioners are shocked because they weren't aware of the legislation. So from a legislative perspective, I think SARS has achieved its goal in terms of enforcing the law through the Tax Administration Act on taxpayers and probably tax practitioners. It's only that they look at the legislation once they have been forced, once it has been forced upon them, rather than them being aware and being proactive in how to deal with SARS.
Thanks, Prof. Schalk, you deal with the Tax Administration Act on a daily basis. That's the bread and butter. What's your thoughts on the Act? Did it achieve its goals?
Thank you, Phillip. Thank you for having me, everyone. I think if you have a look at Section 2 of the Tax Administration Act, it speaks to its purpose, right? And that purpose is the efficient administration of taxes, but on the other hand, respecting taxpayers' rights in subscribing to them, etc. Now, the Tax Administration Act can only be applied within the scope of Section 3.2. And as soon as you act outside that scope, conduct becomes questionable. So I think to answer the question, perhaps it's a move in the right direction. We certainly need it to conform to international standards. But I think we are still somewhat short on the administrative justice component, meaning taxpayers' rights. I think taxpayers' rights are not explicitly provided for in the Act. I certainly, as most practitioners that do tax law would know, it's silent on the right to procedural fairness and reasonableness and lawful conduct. So I think we still fall somewhat short on illuminating and underscoring taxpayers' rights from an administrative law point of view and constitutional law point of view, but from an administration point of view, we're getting there. It's certainly most definitely a move in the right direction. We're not there yet, I believe.
Thanks, Schalk. And Prof. Thabo, one of your previous employments includes being the CEO of the Office of the Tax Ombud. So you had a direct involvement in administration, dealing with taxpayers, dealing with SARS. What's your thoughts?
Thank you. Thank you very much, Philip, and good afternoon to everybody. Philip, when you are the last speaker on any topic, you always start by saying, I agree with the previous two speakers, because they really actually captured the content very well. I think that in addition to what they both said, 13, 14 years it's good time for a law to develop. And if you look at the laws that we deal with in the country, like for example the Income Tax Act from 1962, it's still being developed as it is now. We change it now and again to address the current circumstances. So the Tax Administration Act is a fairly nascent act. It's a young act, and the development of the act talks to that. It was a good thing to do. The interpretation is still undergoing a lot of development as well. I think, to echo a lot of what Schalk just said, the success of a piece of legislation depends on how the people that it governs comply with that legislation. And to the extent that we find in some of the issues we're going to talk about today, that there is still areas of non-compliance by the agency that is tasked with administering the law, it's a bit of a concern. But the law as it is and as it has developed very well. You would see, as you say, my erstwhile employer, the Office of the Tax Ombud, there has been numerous changes on this the provisions of the act that govern that office, and therefore, and that is to make it better to some extent, also in the benefit of taxpayers. Yeah, thank you.
Thank you, Prof. So, ladies and gentlemen, we've seen a lot of case law recently that has impacted tax administration. And for that, one of the items that have come up about is is default judgments. And it seems to be a method used by a lot of tax practitioners, especially tax attorneys, to force us to actually comply with the law. One of the latest cases is EB taxpayer versus SARS. And Schalk, I'm going to go to you first with this one. How do default judgments actually work as a remedy in tax disputes?
It's a default judgment. It's a bilateral rule, so it's a remedy available to not only to taxpayers but also to SARS if taxpayers fail to comply. Phillip, a common misconception, however, is that it's non-compliance with the sections in the TAA. That's not the case. So if the rules subject to the TAA are not complied with, you can use default judgment as a remedy. Now, typically, if SARS failed to, let's say, adjudicate your objection within the 80-day period, it has been amended to 80 days, then you can apply for default judgment under Rule 56. If they failed to adjudicate an appeal, well, as we know, an appeal isn't adjudicated, you go to ADR. But if the ADR is not set up within 90 days or even finalized, you can resort to default judgment. Or if it escalates beyond that to the Rule 3132 statement case, that's now in the tax court. It's certainly something that it's been around for a while, but I don't think practitioners were very alive to it. It's certainly something that started to surface a lot more in our courts. And once you apply for the default judgment, a judge can either direct SARS or the taxpayer to then comply within a certain period of time, or the judge can actually issue a revised assessment under Section 129. So without even dealing with the substantive merits, whether it's 11A deduction, whether it's capital or revenue nature, a judge can actually give you default judgment on that procedural deficiency alone. So it's quite important that we as practitioners are aware of this rule, that we use it to expedite the process, but that we are also cautious in that SARS can use it against the taxpayer if we fail to comply.
So, Schalk, how should the conduct of both SARS and taxpayers influence court decisions on procedural non-compliance?
I think so, yes, certainly. It's, again, because it's a bilateral rule, it applies both ways. Our courts are clearly becoming intolerable about non-compliance for taxpayers and such. If we look at the case of, for example, if taxpayer, that case, SARS filed an execution of their obligations under the Tax Admin Act and its rules. And the court even brought into the picture Section 195 of the Constitution, which deals with acting diligently, acting professionally, acting without delay, acting in a manner that is transparent. So we have to remember that the Tax Admin Act is subject to the Constitution. It's subject to provisions such as Section 195. It's subject to sections such as Section 33. But as much as these sections hold such officials accountable, the Tax Admin Act is replete with obligations for taxpayers and sanctions for taxpayers. So as much as there's a responsibility on such officials to act in an administratively just manner, taxpayers also have a responsibility to be compliant. So yes, it's definitely bilateral situation, and I think we need to be alive to the mutual application both ways.
Thanks, Schalk. So another issue that has come up quite often over the last couple of months, and it was especially visible with the PAIR versus SARS, PAIR Pty Limited versus SARS case, is SARS's authority to reassess beyond the prescription periods. And obviously SARS relies on section 99(2) of the TAA for that. But does this case actually clarify SARS's ability to assess beyond the prescription period, standard 3 years or 5 years, depending on the tax type?
PAIR is an interesting case. I'm assuming I'm still on. It's a very interesting case. We actually acted for the taxpayer in that matter, and it dealt with extraordinary insurance policies and whether these premiums constituted capital or revenue nature. But it also addressed many other issues, one of them being prescription. I think what's important for us to note is that SARS cannot reopen periods beyond the 3 or 5 year period, depending on whether it's VAT or income tax. If they do, they have to prove misrepresentation, material non-disclosure, or fraud. If they fail to prove that, and as this case underscored, then SARS can't reopen those periods. But what's important, Phillip, very important, is that we distinguish between audits and assessments. So SARS can audit 2010 if they want to. It's the additional assessment pursuant to that audit where you can raise prescription, not in the audit stage itself. But I think the case is very welcome to our jurisprudence. We need clarity on the issue, and I think it reaffirms the taxpayer's right to finality. You are not allowed to issue additional assessments beyond the 3 or 5 year period unless you can show there was some intention to misconceive or some intention to deceive rather the fiscus. So it's a welcome case. It is being taken on appeal, which is going to be interesting, but it creates much needed certainty on the issue of prescription, because prescription is a remedy and a defense that a taxpayer can raise.
Thanks, Schalk.
Can I just add in, I think what Schalk said is very critical. I think the one thing is the distinction between an audit and a reassessment. And I think what is also very important is that in prescription, the onus is on SARS to prove misconduct, whether it's fraud, misrepresentation, or blatant omissions, which is very critical. And I think what happens is that that's the first stage for SARS owners to prove, to see whether reassessment is necessary. But in many instances, I think SARS goes into reassessment on the presumption of suspicion of misconduct. And I think that is what is very important, is to say that, especially in this case, that before you can go to exceeding your prescribed period, is whether there is evidence to show misconduct, rather than to say that it was not applied in terms of the law, which is a different interpretation. So it's very, and I think, Schalk, you made it very clear. Look at misconduct first, and if there is proof and evidence of misconduct, then the reassessment beyond the prescribed period becomes is possible. Thank you, Phillip.
Thanks, Prof. Prof. Thabo?
Well, yeah, thank you very much, Phillip, for that. I think that this case is very important, very welcome, I must say. I mean, if you look at the provisions where misrepresentation can reopen or nullify prescription, and the wide definition of misrepresentation and how SARS quickly goes into misrepresentation, it's a provision that is more pro-taxpayer than it is, more tax authority, for in favor of the tax authority than it is for taxpayers. So I think that this case is very good in that it kind of limits that wide application by requiring as Prof. Small said, the SARS it places the burden on the SARS to show that misconduct or misrepresentation. We've seen quite a lot of cases happen where, SARS just alleges that, there are issues, there are things like where a SARS official feels like there's going to be an audit adjustment. They feel like then somebody's guilty of misrepresentation because we should have known about it and we should have been able to. And one of the things that needs to be said is that that misrepresentation needs to have resulted in SARS not being able to actually make an accurate assessment. And that link, sometimes we find that it's missing. SARS just says, you did not disclose this, and therefore you are guilty of misrepresentation. But also there are instances where SARS, for example, asks specific questions of taxpayers, either in a return or in correspondence with the taxpayer, and the taxpayer answers those questions accurately, precisely, and concisely. And SARS later feels that you should have expanded on that or said more, and the fact that you omitted to do that. But the taxpayer sometimes is limited to what the SARS is asking. So I think that the application of the misrepresentation sometimes is extended beyond what is reasonable, and as a result, like I said, this case it's quite welcomed, and in its appeal, I think we all will be looking forward to the outcome. Thank you.
Phillip, can I just add to this? And I think this has got nothing to do with the prescribed period, but I think it's important for our members. What was also highlighted in this particular case was the pursuance of compliance with the accounting standards rather than the application of the tax legislation. Yes, and that, I think, becomes very important for just our tax practitioners in general, that yes, we prepare the financial statements based on the accounting standards that we want to comply with. But when we start looking at it from a tax perspective, we need to ensure that we comply with the tax legislation rather than pursuing compliance to accounting standards.
Definitely, Prof. I fully agree with that. It is two different hats that we need to wear as professionals. Sometimes the hats get muddled, so we just need to make sure that we pay attention with what we're busy with. Then third-party appointments is another big nightmare that a lot of the practitioners are dealing with. They get a phone call from their clients at 2 o'clock in the morning saying, SARS has cleaned out my bank account. I've personally dealt with a few cases like that. So, Prof. Thabo, what steps must SARS actually follow before they can just clean out your bank account?
Yeah, thank you very much, Phillip. I think that the nice thing about third-party appointments is that the law is very clear as to what needs to be done by the SARS, and it is clear partly because this is a very draconian kind of like a provision which allows, as you say, SARS to clear people's accounts out, and also to think about the practice that SARS engages in, where they send those letters to multiple organizations, multiple banks, multiple creditors, or other debtors, and you find that in the end of it all, multiple institutions withhold the money and pay it over to SARS, and then we know what happens when you have to get a refund to SARS. But just for the edification of everybody, direct to your question, one of the elements that need to be proven, one is that there must be an outstanding debt. There needs to be a debt on which SARS is acting. And in relation to that debt, there must be a final demand for payment that is delivered to the taxpayer. It should not only exist, but it should also be delivered to the taxpayer. The third-party appointment should be, or the notice of the third-party appointment must be issued at least 10 days after delivery of the final demand of payment. And in that final demand, the SARS must set out the recovery steps that the SARS may take if the debt is not paid on the date that it's required to be paid. And it also needs to set out the available debt relief mechanisms that are available for the taxpayer under the Act. Just maybe to elaborate a little bit on that, there's a number of cases that have been decided on this, and they are very, very important. One of them was SIP project managers, a case that was decided in 2020, where the court actually stated that the requirements of Section 179 are peremptory. They're very important. They're not a choice. And in that case, a final demand was not delivered to the taxpayer, not via email, not through e-filing. And the court basically stated that it's not enough for the SARS to prove the existence of a final letter of demand. They must also prove that the letter was delivered to the taxpayer. And in that case, the court declared the third-party appointment null and void, very importantly, ordered the SARS to pay the amount that was deducted from the taxpayer's account, together with interest from the date that the amount was paid to the SARS, and then also, very importantly, ordered SARS to pay the costs of the application by SIP, which is a very important. It basically shows the attitude of the court to such misdemeanor, call it, by the SARS. And then there was a case. What fascinates me about this case, Flitmas, is that it was decided 4 months after SIP project that I just spoke about now. And in that case, the court also found that the final letter of demand was not delivered to the SARS, something that you would think, SARS, having just suffered a loss, should have been able to check what else is going on with their cases and would have corrected that, but they didn't. So, yeah, those are the requirements, and that is how SARS has been flaunting that. When I was at the OTO, we had a number of cases where we dealt with this, and we saw the same trend where a SARS official just issues a third-party appointment without following the steps, with all the requirements not being met. And we had to issue a recommendation to the SARS to request the SARS to repay the taxpayer, as the case may be. So, yeah, this is a very touchy subject. It still continues, but I think that the prevalence is a little bit better. Thank you.
Thanks, Prof. Schalk. So, Prof. Thabo now just went through the steps that SARS must follow and what happens. So what happens in a case where you're dealing with a taxpayer that an assessment was raised, there's an objection, there was a request for suspension of payment, and the suspension of payment was approved, but SARS still withdrew funds from the taxpayer's bank accounts? What protection is there for taxpayers to prevent this kind of premature withdrawal?
So it's a good question. The suspension of payment debate. Wow. See, now we have a principle in our law called, obviously, the Panel Argulator principle, and we know it's based on the Medcash case. We also know that the Medcash case dealt with the previous VAT Act, and it also dealt with Section 34 of the Constitution, right, which is the right of access to courts. It never dealt with Section 33 of the Constitution. And Section 33 of the Constitution holds true to our right to procedural fairness, the right to reasonable conduct by SARS officials in this context, the right to lawful conduct. And just to add to what Professor just said, is it's a procedural right, a right to procedural fairness that the court in SIP and that the court in Flitmas reinforced. Just to touch and interrupt myself, Phillip, on your earlier question whether the TIA is achieving its purpose. See, these cases are slowly but surely kind of sanitizing and giving effect to these constitutional rights, the right in Section 33 that deals with administrative justice. And why this is important is it comes into play in cases of suspension of payments. So if a SOP is approved, right, and SARS continue to take collection steps, it's unlawful because Section 1646 says they can't do so. Even if you submit an SOP and it's not yet approved, SARS cannot take any collection steps. The reality, however, is they do. Even if it's declined, 10 days after it's been declined, SARS cannot take collection steps, and then you can naturally try and challenge the decision with a Section 9 remedy in the TAA. So I think to answer your question, that's maybe the context. To answer your question, this is where taxpayers, practitioners, courts, even the judiciary are all becoming a lot more in tune with taxpayers' rights, especially the rights contained in Section 33 of the Constitution, which is the right to procedural fairness in this specific example. So if a SOP is approved and they take collection steps, it's unlawful. And it should be challenged either by way of referring to Ombud or by judicial review. If a SOP or Section 179 for that matter is issued, but it doesn't contain the content it's supposed to be contained, or let's say it's been emailed and not loaded onto e-filing, in which case it might be deemed not delivered under the Electronic Communications Act. These are all examples of procedural unfairness. And if SARS's conduct is procedurally unfair, it becomes challengeable by way of judicial review. Unwanted litigation, which is perhaps why we want the TA to be a bit more developed and evolved around taxpayers' rights, but a remedy to taxpayers nonetheless. I hope that answers your question, Phillip. Sorry, it's a roundabout answer.
Perfect. Prof, do you have anything that you would like to add there?
I think what's important, and I think what Schalk, as well as the Prof has said, is the importance of understanding the procedural requirements. And I think Schalk had emphasized fairness to the taxpayer and the taxpayer's rights. And I think what we have always considered when you're looking at tax, we're looking at the tax legislation in isolation. And like Schalk has now mentioned, you need to look at it in terms of the Constitution, in terms of other legislation such as the Communications Act, etc., to ensure that those procedures are complied with. So yes, the tax area, especially in terms of litigations and objections and appeals, is a complex environment, and you need to know the legislation beyond the tax legislation.
Thanks, Prof. That's a great summary. Colleagues, we are reaching the end of our time very, very quickly. We've got time to take 2 or 3 questions in the audience, if anybody would like to ask a question of the panelists.
Hi, so I'm asking a question that's very specific to our business. When we're speaking of this tax administration, so we get a letter that says we now need to pay SARS this amount of money. The email goes to 4 people, but the letter that said we need to submit supporting documents only goes to 1 email address. Why is it? And when we contact SARS, the person who sends the letter cannot help us with requesting suspension of payment. We apply for suspension of payment, it's declined, we don't get an email. You have to literally go into the SARS, log into SARS to follow up, so you don't get that email.
Schalk, Prof. Thabo, would you like to, either of you like to take it?
I think the one thing I'll add, Prof, you're welcome to go, Prof. I'll add on to it. It's up to you.
Oh, no, I was saying that Schalk would love to answer that question. Yes.
Thank you for that hospital pass. Actually, I would like to answer to the extent that, remember, if SARS failed to communicate with you on e-filing and they decide to use email as the form of communication, then you need to acknowledge receipt. If you don't acknowledge receipt and they don't have an acknowledgement of receipt, then in terms of the Tax Administration Act and its definitions and delivery and the definitions in the Electronic Communications Act, that correspondence is deemed not delivered. So SARS should prioritize communication on e-filing as opposed to email. And if it's not delivered, then in your instance where they've asked for information, that request is invalid, where they've demanded monies to be paid, it could be argued that the demand is invalid. Typically, how you would challenge it, in my view, is you would file a Section 9 request. So if that SOP then is declined, ask them to reconsider by way of Section 9. Remember, Section 9 is a wonderful remedy in the Tax Admin Act and something that is available to both us and SARS, to ask SARS to reconsider its decision. So any decision that a SARS official makes that is not subject to appeal or objection can be challenged by way of Section 9. And then you ask SARS to reconsider. And if they then on top of that give you an unfavorable outcome, you can then challenge that further with the next legal step. But I think it's important to note that you can place them on terms, and that communicating on e-filing is probably absolutely critical towards administration of the taxes, and certainly towards expediting a tax dispute. I hope that helps.
Thanks, Schalk. Any more questions? Last question, here in front. There we go.
Hi, my name is Vincent. I need to ask, I don't know if this is in par with the topic you're talking about, but what happened is that there's a client who's been submitting nil returns to SARS for the past 7 years. SARS audited him. Before they audited, they told him, you must resubmit these things because they are wrong. He did nothing about that. Then they audited him. Still, he did nothing about that. And then now SARS are on his back. They want their money. So his excuse is, I was going through divorce during all those times. So he comes to you, he needs help. Is there a way to help him? Because now, even after being audited, the time for the, what is the word? When you're trying to ask SARS to revise what they did, I forgot the word. Objection, yes. The word is objection. So even the time for the objection is, everything has been elapsed. So how do you help somebody like that? Thank you.
Schalk, sorry, I'm looking back in your direction on this one.
Prof. Thabo would love to answer the question.
No, my answer to that question would be very generalistic, and to say that, you know, to the gentleman that asked the question, sometimes you can help someone, and then sometimes you just have to accept that you can't help someone. It's just how difficult it is, that one. You know, the thing about, and I know I'm not providing any assistance to you directly in this regard, but the point is, one of the things that I wanted to say about the disputes with SARS is that the taxpayer's best tool is to stick to the deadlines, pay when they're supposed to pay, respond when they're supposed to respond. Because if they don't, unfortunately, the consequences are very dire for taxpayers. And I know that taxpayers are always disgruntled by the fact that there is no corresponding dire consequences for SARS or consequence management for SARS officials. But the point is, you really do not want to be found wanting in that regard, because once the deadline is gone, it's gone. There's condonation that you can apply for, but it's very much at the discretion of the SARS. But then the other thing that follows from Schalk's previous responses is that, you know, when you look at the remedies that you can apply or that you can use against the SARS, litigation is very expensive and it's time consuming. The Office of the Tax Ombudsman provides the service, but also SARS has the Complaints Management Office within themselves, which is intended to actually help taxpayers. And I'm just trying to say to taxpayers, it's important to, or practitioners as well, it's important to choose the right remedy depending on the dispute that you are dealing with. Don't rush to court. Because, I mean, once again, litigation is expensive. Litigation takes forever. As it is, from what I hear, the Pretoria High Court can only schedule cases for 2030 or something like that right now. So I think that it's very important for people to just take note of that. And I'm sorry that I couldn't help with that first question.
Perfect. Thank you.
Phillip, if I could add to Prof. Legwaila, I certainly 100% agree with him. There's nothing under Chapter 9 in dispute resolution that you'd be able to do. If anything, in those cases, you would probably have to resort to VDP, voluntary disclosure, but you can't here because you're already being audited. So I think, in agreement with Thabo, your only remedy will lie in debt management mechanisms where you can apply for compromise for that debt and offer such an amount and ask that they perhaps remit penalties and right of interest, or a payment arrangement under Section 167. So your remedies will be transposed to debt management as opposed to dispute. But I agree with Prof. Legwaila, there's certainly no grounds for dispute there.
Perfect. Thank you very much.